What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 19th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's update, I want to go ahead and talk about a few key things. Some people have growing concerns as Bitcoin has continued to correct as we approach the halving in 2020, and many people, including Willy Woo, who's a massive data scientist in the crypto space, has been proposing a theory that this time the cycle is different going into the halving. So I want to talk about that, and then outside of that as well, we'll be taking a look at traditional markets, talking about the cannabis industry, and talking about how we may be approaching the final bottom here for the cannabis market, where I've been bearish over the last few months. And outside of that as well, we've got a sponsored review of Trustology, an emerging cryptocurrency custodial solution. So we'll talk about that later on. I recommend you guys stick around for that. But let's go ahead and take a look across the market. So taking a look over the last 24 hours, it's very clear for anyone who's looked at the price data, it's been a definite bloodbath at the moment across the board for cryptocurrencies. Even some of our top plays in the altcoin space are definitely racking up towards the higher end here. We can see Raven Coin, for example, down 7% going on here as well. Chainlink basic attention token actually working in tandem here, about 9.1% down right now. So again, closing out on some of those gains we've seen, but this is following the direction of Bitcoin, guys. As we can see here, Bitcoin is down nearly 5%. So in this case, again, if we get any serious kind of sell-off in Bitcoin, it tends to be that altcoins follow, right? So over the last week, again, altcoins starting to give up a little bit of their dominance here, at least some of the larger players. If we go ahead and take a look at global charts, we can see here, it looks like we may be approaching to retest the $200 billion range. Right now, we're only at $221 billion, so it wouldn't be that shocking. There really isn't much, I guess, support in overall market cap. You might be able to find a slightly higher level, but to be fair, it would actually be nice to kind of get a full retest, as much as it's a 10% or a little bit less than a 10% decline. But it would be nice to possibly see us retest $200 billion to make that solidified support to move higher, especially as we're talking about this kind of topic of a correction, a short-term correction, in the sense of where Bitcoin's going to set its final low before it starts moving higher, right? If we take a look here at dominance, still the trend is generally holding true here, right? We're taking a look at the, basically we're getting weekly figures here if we take a look at this number. So it bounced up a little bit over the last 24 hours, but long story short, even with that bounce, we're not seeing any severe trend shifts in this case. You guys know I look at a weekly time frame. All right. So I want to go ahead, seeing as we've got some really interesting topics today, dive into our first one here and talk about this topic of the halving. Now, I'm going to be talking about a lot of different kind of points of view and perspectives here and try to keep it as simple as possible. But I want to, again, hear both sides out on this, right? So this is a good chart, I think, to kind of precursor. It's the logarithmic regression projection here, or the moon math wind chart, or the rainbow chart, whatever you want to call it, that generally shows these kind of logarithmic channels that Bitcoin and its price historically has gone through. And as you can see here, we're definitely on the cheaper end here. If you guys believe that we are going into the next cycle, that eventually we are going to go through the halving, there's going to be a supply shock, even though, again, some people say it's priced in. We've seen historically that after these events, when they've already been priced in and programmed into Bitcoin, that there is those supply shocks, because as a growing wave of investors come into this space who don't understand about Bitcoin and weren't preparing for the halving, buy into the market, the supply and demand economics play an effect in this case, right? They start to come in and start to play into that growing demand with that lacking supply, or the lagging supply in this case, right? So that's what I always try to propose to people right off the bat. I think it's kind of a silly argument to say that it's already priced in, right? I mean, for example, in this case, if we take a look at something like gold markets, right? Gold markets, for example, have had about 1 to 2% inflation every year, right? It's been like that historically, right? But gold can still have outliers in this case against fiat currencies, even though it's managing an inflation rate that's very similar to some of the major national reserve currencies on the global stage, right? So it usually has to do in this case with the demand shock. But what's nice about Bitcoin is that we know predeterministically that over time it's going to fractionalize its supply in this case. A lot of people just don't understand that, right? So anyways, maybe I didn't make a very clear point there, but just one thing to always mention here to consider. Now, I want to go ahead and read through this article here to talk a little bit about Willy Woo. Now, I want to precursor as well. I don't want to waste a lot of time, but I want to go ahead and say I really admire Willy Woo. He's one of my favorite kind of like data science trend analysis individuals in the cryptocurrency space. I don't mean any harm to him in disagreeing with him, but I'm going to try to present his view here as best as I can and then talk about why I disagree to some degree. Okay, so just want to precurse that. I would be honored to meet him one day. He's a cool guy. I've used a lot of his models before, but he believes that right now the 8K bearish price action that we've seen for Bitcoin is a unique setup, something that we haven't seen before in the past for cryptocurrencies. And again, maybe I'm misinterpreting his position, so I want to keep open to that as well. But let's just go ahead and read through the article here, okay? So as you all probably have seen, it wasn't just last night, it's been over the last few weeks. Bitcoin has been fading out a lot of the gains from the China news. This is probably no shock to anyone, and it's led market valuations to decline and Bitcoin going down to the low $8,000 range, and even I think testing for a short while, if I'm correct, testing down towards, I think it was like a little bit over 700. Let me go ahead and get the actual price figure here. So no, we actually, just bottomed at around $8,040. Okay. So let's go ahead. We'll jump back into the article here, get an understanding of what Willie is proposing. So it really stems from a tweet that he put out, and he's basically talking about that we're not going to repeat the halving. So I'll be actually fair in this case. More than anything, I always like to get perspectives that are contrarian to the over-optimism of markets. And I'll give Willie Woo that benefit in this case, right? He expects way more volatility. Short-term bearishness is, he said short-term bearishness is all I'm saying. And don't expect price will repeat past halvings. So he's basically saying in this case there's going to be a lot more volatility and uncertainty. And the biggest reason for this is that we're seeing a kill-off of weak miners. So he's referencing to the fact that we had about a price drop from 14K down to 7.5K in this case, right? If we're, again, going to go back to those lows again like we did previously back a few weeks ago before the China news, then in that case it's a pretty big price drop for miners in this case, especially with an increasing difficulty rating, right? And I think these are some valid points. I have no doubt you're going to see some miners start to capitulate, and many of which are going to sell what Bitcoin they've mined. And that's going to probably apply some sell side pressure on the market in the short term. But all in all, we can, kind of go through the complexities of the economic side of Bitcoin mining. A lot of people, will falter one way or the other, saying that it's going to have, a positive effect or negative effect. People as well don't even consider the fact as well that a lot of this is happening over OTC. So it really matters if there's a buy side demand on OTC to compensate for the continuous sell side, or the, as we've talked about as one of the data science indicators, the newly circulating Bitcoin that gets issued on a daily basis. Those are really the factors here. It's supply and demand economics, right? But the thing that I want to point out that I think is really the missing piece here in Willie Woo's analysis is that on his chart here, he's basically making the case that we're in a bearish phase of price action, right? Putting the economics aside here, putting the argument about miners and this and that, he's saying that we have somehow entered into bearish price action for this exit out of the accumulation phase approaching the halving, right? But I would actually disagree with that. In fact, right now at the current price range, we're nearly between a 2 to 3x of Bitcoin. We are above a 2x for Bitcoin from its previous lows for the 80% correction, and it's nearing a 3x. We were just at a 3x actually last week when we were sitting at 9,000, right? We're basically 3 times above where we were at the lows at 3,100. Well, if we take a look at history, right, it's exactly the same kind of thing that happened before the halving, right? In fact, we are actually overly optimistic at being at a 3x, right? Because the lows down here were around 200, right? And until we got up here to the halving in this case, we're up in the few $100 range. So I'll go ahead and actually kind of show this on the chart here and kind of solidify my point. So each of these golden lines here are the halving events, right? This is the expected date that we have and the 2 previous halving events that we've had for Bitcoin, okay? So let's go ahead and take a look at the 2 previous events here, all right? So the low here that we set, a nearly double bottom, we'll just kind of rough it off here. We could even go lower, but I'm just going to say it's $200 to keep it simple. That's really, I think, the even that people were looking for, especially when that was resistance back here at the previous short-term high for Bitcoin, right? So let's go ahead and get an understanding. When did we actually get up here to a 3x from the lows, right? We were just again at 9,000, right? We could even do something as simple as a 2x, right? Well, it was actually over here, okay? So we already set a 2x here previously for Bitcoin, right? And if we wanted to be more, again, kind of conservative and talk about how really we've seen a 3x in this case, well, in that case, we got that when we were around 600, right? So in this case, it took a pretty long time to get to that 3x, right? Well, if we take a look at the previous cycle as well, right, before the halving, right? So if we take the low here at $2, right? This is, again, going a little bit far of a stretch here, right? In this case, how long did it take us to get a 2x? Well, not really long, right? It took us just a matter of a few weeks as Bitcoin was in a much smaller market phase. And along with that as well, for a 3x, not that much longer, just really a week or two. So I don't want to use that as an example here, right? And again, this is one point that a lot of people are making is that we're using, just because this is slightly off from previous cycles, doesn't mean we should be using this as a sole indicator, because we don't have much price data to work with. But if we're going off really the last halving in this case, let's be real, that's all we really have to work with here, that we could get some kind of similarities. Notice how we are multiple months away from the halving event. To say that we're going into the halving event with sell side action when we're nearly close, just $1,000 away, which we can see can come into Bitcoin's price in an instant, when we're already at a 3x and we've still got 6 months to go and we're going to call this bearish, I don't really get that analysis, right? We can see here that we've actually pressed up towards the difficulty, which we've never done in the previous accumulation phase. So what it shows us is that we had a little bit of overt optimism coming out of the 3K lows. That would be my concern in this case, is that for a while we might stagnate in order to play catch up with a much more consistent uptrend past the difficulty where it is excessively profitable for miners. That's what I'd be looking for, right? And if we take a look here, Bitcoin miner profitability is back down towards the range it was back in January, right? So we are going through a bit of a capitulation phase here, but I don't see this so much as a negative sign, right? If in this case, you know, we've seen in this case too much exposure to miners in this case, right? I think in this case we've already started to see the capitulation of price. We've already gone through a near 40 to 45% correction. This is the time to get optimistic with Bitcoin. I'm not telling you guys to do anything. I'm not telling you to go buy anything, but history tells us 40% plus corrections are buy opportunities on Bitcoin. So I don't get fearful. I don't think this is going to be too dramatic from the past year, because this chart here, this is something where people took the chart that Willie had posted and posted my point here, which is that at this same kind of time period, right, we're months away from the halving event, right? We may be coming down to retest this low here at the $7,000, you know, 7,500, 7,800 range. Not going to doubt that at all. But if you're saying that's the only kind of potential pullback that we might have, and I'm, as many others are looking for the supply shock that the halving is going to have on another wave or another cycle of people buying into Bitcoin, that's not really fearful for me. It just tells me that we're a few months away from retesting anywhere near the highs that Bitcoin previously had. At least that's what history shows us, right? So anyways, that's my general kind of analysis on that. I'd like to know what you guys think about it. Again, it's a very simple way of just kind of, not so much critiquing, but just kind of tossing my 2 cents into the arena here. Again, cutting out the complexities here. We're months away. We can't say this is bearish price action, I think, to any degree. So that's where I stand in a disagreement, I think, in that case with analyzing it. And again, I think this chart really puts it in perspective, right? We're months away. Now, that does mean that Bitcoin is not going to pull a 10 or 20x tomorrow or next week or next month. So we got to be patient, right? So hopefully I make good sense on that, guys. And again, we're going to be watching our indicators here to get a confidence that we're eventually going to reverse. But as we talked about, indicators aren't showing it yet. We haven't gotten across in the MACD. Squeeze the momentum indicator continuing to decline. Stochastic Rsi, the one indicator that has 2 points now, and it's weak. And these look like they're about to cross over. In fact, I'd actually deduct a blue point, the point for the blue line here, because it looks like it's crossing down here, not only below the orange line, but outside of the purple channel. So, no breakout so far. I'll let you guys know, though, when that does happen, when our indicators start to flash. And we'll probably see it materialize in price. All right, so talking about market cycles, it's not just cryptocurrencies like Bitcoin that go through cycles. All markets go through cycles. And they have not only their parabolic raises, but also their massive capitulative sell-offs. And the cannabis sector is a prime example of this. And it's not only a prime example, it's one that I'm watching extremely heavily right now. And it's because I've been remaining very patient on it. So as many of you might know, I've talked about it on the channel. I've been watching the cannabis sector as far back as 2012 and 2013, when I was really just kind of getting into the beginning phases of investing. One of the first companies I invested in, of course, as all traders make in their beginning phases, they have to learn the hard way. I basically invested, I think it was MJNA, it was a medical marijuana penny stock. I did that alongside a stock trade in a solar company. Luckily, the gains I made in the solar company, I made like 20 or 30% in a month, outweighed the losses for the most part. They were equal trades, so I was good in that regard. But I've been investing and watching this sector for some time, and I actually missed a lot of the cannabis rally in the past, but at the same time, I didn't FOMO in. I didn't fall into the parabolic kind of trend that was going on, or the exponential rally that was going on during the time crypto markets were kind of closing off their ends of their rally, right? We saw a lot of companies. This is OGI, Organigram Holdings, one of many of the cannabis-related companies that continue to sometimes, in many cases, rally through 2018 and 2019. But I want to go ahead and talk about how now we might finally be in an opportunity across the board in the sector to finally start finding some value. Again, you're going to have to determine it for yourself, guys. This is not direct financial advice. This is just me simply showing you what I look for in these cycles, right? So you all know when it comes to these kind of new emerging markets, these exponential markets that can pull a 10, 20, 30, 40x, we look for about 80% corrections. That's the general ballpark. Whereas in most markets that are a little more normalized, 50% is kind of the gauge you want to look for a pullback or a recession. That's a good example. When we're taking a look at the S&P 500, we want to generally see a 50% correction, which is what we've seen historically in a lot of cases. But in this case, we're looking for 80% corrections. And if we look across the board, things are getting very, very close to that. And not to mention that 80% correction from their highs is at some very key support levels that we've seen in the past, right? So if we take a look here at a perfect 80% correction, this is pulling us back to support we've seen back here before we continued the rally into 2018 and 2019, right? PE ratio is much more normalized, market cap much more rational, and we're getting to a point again where you're getting a certain company, in this case, equities, at a 1/5 discount from its original price. That's pretty fascinating. It's significant. And we've had just straight sell-off here. Now, again, I'm not going to FOMO in. All my indicators are showing that this has still got a little bit of a ways to go. And I think around these gauges, this 80% mark is where we're going to find that final capitulation. But I'm not going to rush into it. We'll wait for the indicators to give us that confirmation. All I'm saying is to keep an eye on a potential value play here. Right? We'll take a look here at a few other players. Kronos, right? Broke the support line here that it was holding for a while. Looks like it's coming down to a previous support range. Well, just like Organigram, we're a few percentage points away from being able to come down to a big even like $5 and having an 80% correction. Historically support. Very big even level. 80% down from the previous highs. That's what I look for. Let's go ahead and take a look at a few more. So we'll take a look at CGC, Canopy Growth Corp. Look at this. Even broke past our descending kind of channel here that we had here on the chart that takes into mind the original factor of rising lows and now lowering lows, right? So I'm just going to keep my chart the way it is and stuff. But you can generally see here, the sell-off has picked up like crazy over the last few weeks. There's been massive capitulation. And it looks like we're straining our way down to somewhere around $10, $10.50. Previous resistance becomes new support. It's very simple. And some of you guys could probably extend this to also all the way up to the Wixes and stuff and maybe have a slightly higher price target for the low. It doesn't matter. I'm using this more because it was a consistent high here. And this was very thin price action that didn't exist for very long. So sometimes it's good to use a more consistent high if it's represented on the chart multiple times. We saw that multiple times here, here, and here. And outside of this as well, there's a few other ones. Aurora Cannabis, ACB, right? Let's take a look at Aurora Cannabis. Same exact situation. Coming close down here to previous resistance, looking like it's going to make its support. Down to a very large degree compared to the previous highs. Right? If we take it from about here, where we have the last solid candle, look at that. Around 81%. I'm not so much stressing about trying to pick the absolute bottom, right? And I'm not saying that anyone should try to do that. right? I'm saying in this case, watch the indicators. As we see here, all of our indicators are looking like they're ready to possibly start a reversal on Aurora Cannabis and some of the other companies. They look like they're getting to pretty oversold levels. And it's because we've come into, we've had a reality check in the sector. We've gotten to a much more rational level in the sense of valuations for the select few plays that are available for people to invest in the cannabis sector. And we can see here that being reflected on some of the major indexes. If it isn't already clear looking across the board how many of these players work in tandem in the sense of their price action, take a look here at the Canadian Cannabis LP Index, right? These are some of the better indexes that are out there by New Cannabis Ventures. And you can see here that whereas we had around an average high around 1250, that's kind of the big even level here. We're getting very close to having a full 80% correction across the board. And interestingly enough, that takes us down to a general range where we found support in the past. So I got to say, again, I'm not so much eager to buy in here, right? I want to make sure that the trend has kicked off. Because let's say, for example, like let's just kind of give the benefit of the doubt. Let's say I pick the absolute bottom in this case, right? I come in next week. It's the final week of capitulation. Everyone's selling off. Everyone's flooding out of cannabis stocks after they bought it, at upper single-digit levels here in Aurora Cannabis and Canopy Growth Corp and whatever it may be. And I pick the absolute bottom. I could still be a loser for some time having my money in a market that may not grow. It could push sideways for all we know, right? We can draw a little polyline chart here. It might, bounce around this range for a while, might come back down, right? That's probably not how price is going to move. It probably won't do that for that long if it does do something similar to that. But I'm just saying, I'm not going to FOMO into a market trying to pick the bottom because A, that's usually a loser's game. And along with that as well, it may not be where the growth is. I might buy into a price that is higher than the low Bitcoin is going to go to next week, but Bitcoin can then reverse and accelerate and go 20% up or 42% like it did just a few weeks ago where I was averaging in multiple times. And that's the key point. We want to find plays that are going to be set to reverse, that are going to actually start picking up and actually start providing price gains that we can lock in. That's the concept. That's the mindset a trader should have. It should not be about trying to be a market whiz picking the bottom. And also, if you're an investor, you don't want to stress about it. Well, even at that, you should ask yourself, is this the best opportune time for growth of my capital? It doesn't matter if you're a trader or an investor. That's the key thing you want to worry about, right? You could say, maybe this is an area down here where there's value. Fair point. But it's a matter of accepting that your capital might not grow for some time. So that's the contrarian viewpoint here. I want to provide a very neutral case. I'm interested in where price is heading. I'm looking to see if we get that sharp rebound, a possible trend reversal, and maybe start to enter a slow uptrend in this case where we might be able to double valuations in the cannabis sector because we've had that 80% correction. I'm definitely looking for something like that. But if I don't see it in my indicators, I'm not FOMOing it. And I'll remain very patient because there's very much a chance that these companies could go down to 85% or 90%, or some of them go down to penny stock valuations and never come back, right? So there is some risk. There is a potential for loss that I'm accepting in this case. And I want to make sure that the market comes in with the momentum that I need to ride the trend. I don't want to do the hard work. I don't want to try to pick the bottom. Anyways, I'm rambling on, guys. I hope you all enjoyed this video. And now let's go ahead and actually take a look at today's sponsor. And we're going to be taking a look at Trustology. So let's go ahead and dive into the review. Alrighty, everyone, so let's go ahead and spend some time to take a look at today's sponsor, and it is no other than Trustology. Now, I don't think I have to be the one to tell you this, but I think it's become abundantly clear over the last few years that proper private key management is one of the largest, if not is the largest issue to long-term mainstream adoption of cryptocurrencies. And there's a lot of clear reasons for this that are clear right off the bat. I mean, let's face it, in the sense of user experience, if we throw 12 to 24 words in the form of a seed phrase at a new user, it's going to turn off a lot of new users to digital assets, especially if it's their first time interacting with a cryptocurrency wallet. Not to mention as well, for those newcomers in the space, managing those 12 to 24 words is a pretty big responsibility. And due to negligence, sometimes people will not write down those words or will lose their seed phrase. And even worse, sometimes due to improper management, hackers or thieves are able to gain access to that seed phrase, therefore gaining access to the user's funds. And at the end of the day, let's be honest and realistic, guys. When it comes to the mainstream adoption of cryptocurrencies, we're likely going to live in a world where a lot of people, or at least a decent portion, are not going to want to be the sole owners of their private keys, right? We streamline and allow other people to manage a lot of things for us in today's world as a service, and Trustology provides not only that, but also the other two factors that we mentioned, providing a trifecta of all the things that are desirable for a lot of mainstream users: a clean user experience, proper custodial solutions, as well as the ability in this case to use cryptocurrencies in a functionable way. Okay, so we're going to go ahead and dive straight into the wallet here. There's a lot of exciting things to talk about, but just right off the bat here, let's talk a little bit about onboarding and user experience. Onboarding is extremely quick comparative to other crypto wallets. In fact, rather than throwing a seed phrase at your face, they actually ask you for proper KYC information, as they are providing the custodianship of your funds in this case. And it takes a little bit to get approved, but after a while, once you go through the actual process and you are approved, you can now access your accounts and generate cryptocurrency wallets from within Trustology. And it's extremely clean, guys. As you can probably tell here, the user experience is very nice. You guys probably know I'm a big user experience bug. I like when things are minimalistic and clean, and the design here is on point in my opinion. Not to mention, it's very simple and minimalistic in the sense of how you actually interact with the wallet and the types of functionality that are in there, right? So as we can see here, we're taking a look at an Ethereum wallet that I generated, and you can see in the top end of the account details, you can see the first 5 and the last 5 letters and numbers of that address, so I can easily verify what account I'm looking at. But also you can tell by the name that I've granted the account in this case. And you can see the different types of digital assets that I have for the wallet. Now the really cool thing here is that I can manage what tokens I see, right? I can move the priority of certain tokens here using the sidebar, but I can also turn on and off certain digital assets in this case, again, to cut out the clutter when I'm looking at my wallet if I know I'm not going to be having a certain type of token. Now, of course, like any wallet, you can send and receive different types of value. This is expected in any wallet. You can choose your certain type of token. You type in the specific address or use a QR code scanner in this case. You can select the amount of the crypto you want to send, in this case ETH. And if you really care about it, you can change the gas for your transaction in order to process it at a more fast or cheaper rate in this case. But the major function really comes in when you're able to buy cryptocurrency from your wallet. And this is something that's really exciting. Trustology isn't the only one doing this. There's a lot of different cryptocurrency wallets that are now providing much more functionality, and a wave of wallets I call Wallets 2.0. But it's really cool that within the Trustology wallet, you're able to buy directly cryptocurrencies from within the wallet. And they use a provider known as MoonPay, basically allowing you to connect to your traditional banking information and buy crypto as you would likely on an exchange. And the cool thing about this is that it cuts down a lot of the clutter, not only for those of you who may already be in cryptocurrencies or for those of you who are maybe considering or on the fence about crypto, but for the broader world audience in this case. If we live in a world in this case where the standard 10 years from now is that someone has to go to an exchange and register an entirely new account in order to buy crypto, that's too complex, especially when we're trying to get in a world where people are, in a sense, a manager of their funds. In this case, they have cryptocurrency wallets and have it in secure solutions. Right? It's too much to ask for. So Trustology doing this is really awesome. It's good to know that you have it built directly from within the wallet. Now, the important thing to understand is what cryptos you can store in this wallet as well. So you not only have a clean user experience here, but you can store a pretty wide range of assets from Bitcoin to Ethereum, as well as ERC20 tokens. So you can generate 2 types of different wallets. And as you can see here, they prompt you at the bottom here with the darkish blue button here to create a new account. And it's very simple. I just give it a name I want. I could type test wallet, right? And I could choose either Ethereum or Bitcoin and simply add account. After that, it's going to request that I type in my 4-digit PIN code phrase in this case in order to be able to generate the wallet. But after I've done that, it'll generate the account within a matter of seconds and add it to the list here. And I can have as many accounts as I'd like. I can have a lot of Bitcoin, Bitcoin wallets, Ethereum wallets, and I can use them for certain purposes. That's another important thing to keep in mind here is that they provide a variety of solutions at Trustology for individuals in this case, as we're taking a look at right now, but also institutional grade solutions through Trustology. So for management of many funds in this case, right? If we're talking above $10,000 to hundreds of thousands, if not millions of dollars of digital assets, you want to make sure you have a proper custodial solution that not only is secure, but you can access it anytime. And that's true for Trustology. They use actually a very high-end military-grade security level of key management in this case that a lot of wallets don't use, known as HSMs, which are hardware security modules. Long story short, it's top of the notch in this case in regards to industry kind of standards for security of funds for your wallet. You also have an inbox here as well that you can receive messages in. And you also have a settings feature in this case. So you can select your native currency if you want to view your assets value in Great British Pounds or USD. A lot of the team is actually based out of London. And during the interview we're going to do in the next few days, as you'll see in one of our future videos, you get to learn a little bit about how the company came about if you guys want to see more about the team. But the key thing to understand here is that they make key management simple. Yes, you are using Trustology as a custodial provider in this case, but it's important to understand that, as I mentioned earlier, with the use of HSMs, as well as a lot of industry level standards in the sense of white labeling certain addresses, you can make sure that your wallet almost becomes hacker resistant in this case. It becomes less prone to the kind of malpractices that can happen sometimes when you're the manager of your own keys and you don't really know what's possibly going on or what you're doing, right? I mean, so let's face it, it's pretty overwhelming for a lot of people out there. It's the reason we're at less than 1% of global adoption, right? So again, I think solutions like this are very fascinating. I like what Trustology is doing, not to mention as well, they're going into a direction that I really admire, and that is integrating with MetaMask. So for many of you out there, MetaMask is probably one of the most common web browser extensions for managing cryptocurrencies. And the issue for a lot of people using MetaMask is storing their funds in MetaMask can feel a little bit insecure sometimes, or not so secure, especially if you're managing a lot of funds. Well, through Trustology's integration, you can use MetaMask to interact with dApps online, so you can interact with DeFi projects like Compound or MakerDAO, while also having the custodial security of Trustology. And I think that's a really cool combination. Again, it's things like these that make it much more practical for people to use cryptocurrencies in their day-to-day lives and use them in much more interesting ways, where wallets become much more functional than the kind of standard wallets we're used to over the last decade of sending and receiving on one specific cryptocurrency network. This is a multiple digital asset platform that allows you to streamline custody, streamline user experience, have additional functionality, and be able to access a variety of standards that weren't expected in wallets simply a year or two ago. So I think we're embarking on a really cool trend. As I mentioned, not just in Trustology and new wallets that are coming out, but Trustology is definitely a leader in the regard of providing these kind of three desirable traits for a lot of users. So if you guys would like to give Trustology, a kind of check in this case, if you want to test it out on your own phone in this case, you can go ahead and check out the links down below and download the wallet for yourself. And not to mention as well, if you want to find out some more information on Trustology as a company, I'll also leave those links down below as well. But for those of you who are really interested, if you maybe test out the wallet and really like it and want to learn more, stick around for a video in the coming days where we're actually going to be doing an interview with the team so you can learn even more about what Trustology is doing in order to not only improve private key management, to make it as streamlined and as simple and functional as possible as well. So that's going to be it for the review today, guys. I hope you all enjoyed the review on Trustology. If you liked it, drop a like on the video. And again, check out the links down below if you want to learn more. That being said, I hope you all are having a fantastic day wherever you are, and I'll see you all in the next one. Stay tuned.